Hey there, everyone. My name is Ryan Schul. Welcome to my data science channel. This is video number 5 out of 6. I'm doing a series about AI agents and training an AI agent to try to make profitable returns or profitable trades on a portfolio of securities so we can generate positive returns on our invested capital, right? That's what this is about. This is number 5 of 6. And why would we even want to set up and train and test an AI agent to make trades for us? There are a bunch of reasons, right? Obviously, for automation, that is one reason. Continuous learning for the AI agent, consistency, persistency. Wall Street loves things that are predictable, hates uncertainty, right? So trying to generate consistent returns that are predictable and sustainable and repeatable if possible, right? Backtesting, investment strategies, adaptability, optimization, overall risk management, right? Risk management for the portfolio. How do we manage the risk exposure here? If you put money into the market, are we going to lose that money, right? There's a big risk exposure right there, or are we going to make profits, right? So risk management. And by the way, I've discussed this in a couple other videos. Probably the two best risk strategies that you can employ are diversification and dollar cost averaging. Okay, diversification by investing in a whole bunch of different stocks. So if a couple of them depreciate in value, hopefully the others will appreciate in value and offset your losses, right? That's diversification. And dollar cost averaging is when you invest the same amount and the time frequency that occurs over and over and over, right? So invest $1,000 at the end of this week, 1,000 at the end of next week, 1,000 at the end of the following week, and so on and so forth, or 1,000 at the end of this month and next month and the month after that. As long as it's a recurring, repeating pattern like that, you're going to buy more shares when the price dips. Okay, so if it goes down in value, you buy more of it. If it goes up in value, you buy less. But over time, you buy the same amount. You invest the same amount. And if the market trends down, you're not buying at too high of a price, right? You're buying more and more as the price goes down. And if the price goes up, hopefully, long term, most of these stock prices do go up in the long term time continuum, then you will make more money as it appreciates in value. So I tried to put the code into different modules. That was my goal here. So in all 6 of these videos, you'll see essentially the same thing. And the first cell here, this is the first module, basically first compartment. I try to compartmentalize everything. We go and fetch the stock prices. So I'm going to grab data for these stocks right here. So I'm going to get that for the past 36 months. And of course, you can put in any tickers that you want. Anything that is tracked by Yahoo Finance, you can go ahead and put that in. I'm not sure how many stocks they cover, but I think it's at least 50,000. Maybe it's more than 50,000. It's quite a bit. So any of your favorite stocks, you can just pop those in right here and see what the profit opportunities are for those stocks, right? So this is a variable that you can control, and this is another variable that you can control. So I think in this case, 36 months makes sense. It's a long enough time period to do an analysis and get some insight and make informed investment decisions here. You can make that shorter. You can make it 12 months. I don't think you want to make it too short. You can go down to 6 months. Depending on the type of analysis you're doing, I think it kind of makes sense to look at 36 months of data in this case. There are some other strategies. I like portfolio optimization. That's one of my personal favorites for that. I tend to go back about 6 months in time. I think 6 months is sufficient when you're doing portfolio optimization. This is a totally different type of investment analysis and different type of strategy that we're reviewing here. So I think 36 months is appropriate in this case. So I'm going to fetch the data. This is what the results look like when we go to hit the API endpoint and pull it back. This is what we get. I'm not going to run this in real time. I can run this one. This is pretty fast. But to train the AI agent actually takes quite a bit of time. It's probably 15 to 20 minutes at least to get the agent to be trained, tested, make predictions, make trades for us. It's actually going to trade on the portfolio automatically, which is pretty cool. But I'm not going to subject you to 15 to 20 minutes of just waiting and watching my screen update and flicker a little bit in between the updates. That's not worth it, right? So you can run the code. I'll share all this code with you. You can run it when you copy and paste it into your own Jupyter Notebook environment. Or you could run this in Spider if you have Anaconda Spider. That's fine too. Like any kind of IDE, I guess. I like Jupyter Notebooks because they allow you to create dynamic interactive charts and I like those charts a lot, those Plotly charts. So I tend to use that, and I tend to use a lot of Jupyter notebooks. So we're going to take $100,000 as the initial amount invested and spread it equally across all these stocks over here, right? So it's probably about 15 different stocks, give or take. I didn't actually count it. It looks like pretty close to 15 from what I'm seeing here. So we take this 100,000, spread it across all of these stocks in equal manner. So if the stock is a little bit cheaper, we'll buy more shares. If it's a little bit more expensive, we'll buy fewer shares, but the same dollar amount gets invested in those. Probably about 7,500 if there's 15 stocks. If there's 10, it would be 10,000 each. Okay. So this is the buy and hold portfolio. We start with 100K, right? We see the daily P&L. So as it moves, or as the stock prices change day by day, you'll see the updates in the portfolio, right? And we end up with 147,000 at the end, right? So we made 47,000 on the initial investment of 100,000, so almost 50K, so almost 50% ROI, 50% return on the investment. So what are we actually doing? So we fetch the historical stock prices, we put that into a buy and hold portfolio, right? And we're looking at the market value of the portfolio at the end of 3 years. So we made about 50%, just under 47% exactly. So in the next step here, we're going to set up a reinforcement learning agent and try to create a simple momentum strategy. That's the one that we're looking at here. So momentum-based trading strategy. Okay, there's 6 videos. I did 6 total, and all the videos investigates a different trading strategy and the outcome of these 6 different trading strategies. So we're looking at simple moving average strategy in this case, and we're going to focus on 10-day. Now you can change this. It can be anything, right? I'm looking at rolling 10-day and looking at the mean price. So if you want to look at a different metric, I think 10 is appropriate in this case. 50-day moving average tends to be used a lot, and I've seen 200-day moving averages pretty common. So 50 and 200 or 200 days are pretty common. I'm using 10 in this case. And it's just simple moving average, right? That's why we have the mean over here. And I'm setting up some trade signals basically to tell the agent, should you trade the stock, yes or no? 1 indicates yes, and -1 indicates no trade, right? So that's how we're getting the trading signals. We're getting the trading signals right here, okay? So moving on, I set up a trading environment here and basically training the RL agent. This is a reinforcement learning agent to work in this custom environment, understand how to make profits. Are you generating profits? And if you are, I will give you a reward, okay? And if you're losing money, I will give you a punishment. That's what I'm saying to the agent, okay? So you're making more money for me, here's a reward, and you're losing money for me, thanks, I can do that all by myself. I don't really need your help for that. I'm going to give you a punishment if you're losing money. Okay, so the actions are buy, sell, or hold. If there's no firm decision about what needs to be done based on these trading signals over here. Okay, so the 3 outcomes are buy, hold, or sell, and then we either get a profit or a loss from the trades. Okay, so here is the RL learning environment. Again, we start with 100K, just so you saw it in the buy and hold portfolio. Okay, and I'm going to share all this code with you so you don't have to worry about writing this down and making notes and all that stuff. You can just download the file that I'm going to share with you when I share this video, and you can copy and paste all this from the file into your own environment. And then, by the way, make any changes you need to make. If 36 months is not good for you, change it. If you want to look at different tickers, change it. If you want a 20-day or 30-day moving average, change it, right? This is very dynamic and very interactive. So here is the agent's progress as it's learning. It's printing out its progress, giving you indication of what's going on here. So let me shrink that down a little bit. It's kind of big. It takes up a lot of space. And okay, so that's shrunk down. That looks nice. And what is all this stuff in the report? Basically, it's the agent collecting data for training, right? We're training and testing the agent and helping it to make profitable investment decisions, right? And buy sell transactions. And we're looking at the daily P&L. That's the profit and loss from every one of these transactions. The rollouts represent a series of states or actions and rewards that the agent is exposed to. We look at performance metrics and we monitor and debug the training environment for this agent, right? So that's it. I have some more notes down here. You can look at that at your leisure. I'm not going to get into all that right now. So here's the buy and hold portfolio. Started with 100,000, just like the AI portfolio. And this is the first 5 trades. You always start with 0. Python is a 0-based environment, right? We end up at 47,000. So the agent made 47% return in 3 years. Not bad. The AI portfolio, based on moving averages, made about 16,000. I don't know what this last NAN is, but yeah, it must be like some kind of moving average calculation. I didn't get the last one, but so we'll kind of just cut it off one day before 3 years. It's basically the same. Doesn't matter. And so you can see here that the agent really didn't do a whole lot of efficient learning and didn't really perform that well. The buy and hold strategy outperformed the AI strategy by quite a nice margin. So it didn't even generate 20,000. It's only 16% return over 3 years. That's kind of low, probably 5% return per year. And this was 47% in 3 years. So maybe about 15% return per year annualized, right? And then when you plot it, you can see the result over here. This is the AI portfolio in red and the buy and hold in blue over here. So really, buy and hold is much simpler. You don't generate a lot of transactions costs. You don't generate a lot of tax consequences by buying and selling, mostly by selling, right? And it's just easy. Just put the money in there, sit out for 3 months, take the money out, and you've got 47,000 profit. AI, it's a lot of work to set up the agent, to do the training, do the testing, and the performance really is coming up quite short here. And it's kind of disappointing, but you know what? It is what it is, right? Buy and hold wins out. In this scenario here, this is the 5th video that I've looked at, and honestly, all 5 videos, the buy and hold strategy outperforms the active trading strategy. So that's kind of funny, actually. Can't make this stuff up, guys. It's just easier, way easier from a sanity standpoint and from a mentality standpoint to just buy and hold rather than do lots of active trading. Maybe generate a lot of commissions, a lot of churn, a lot of tax consequences, and what do you get out of it? More losses than gains, so it's not really worth it, right? So I tried one more example. I tried just a slightly different approach down here. Okay, so I'll share all this code with you. I'm not going to get into all the fine details here. It's kind of a lot, but I'll give this to you and take your time. Just go through, try to understand it, try to learn from it. I did a lot of research, so a lot of work went into this. So I think this is pretty solid. I think it's pretty tight. If you do notice some mistakes or issues, please post that in the comment and I'll take a look. But I think it's pretty solid analysis here. So here's one more strategy again. Setting up the agent to do the training and the testing. I'm going to shrink that down right there. Okay, that thing is, where is it now? Sorry, bouncing around a little bit. That is, okay, so that was the agent learning. Okay, so that's the box I just shrank down. Okay, it gives me a little bit more room to work on the screen. And then based on this strategy again, so let me look at something over here. Yeah, so we end up with 15,000, right? We change a couple little tweaks. I made a couple of tweaks in the AI trading strategy. The buy and hold, of course, gets exactly the same thing. All it's doing is buying day one and sitting on that portfolio, not doing anything there. And these 2 strategies here, tested 2, they both came up just about the same. I think the first one was a $16,000 gain. This is a $15,000 gain with a couple tweaks. So buy and hold wins, right? Over the active artificial intelligence reinforcement learning agents. Buy and hold is a lot simpler, and it just outperforms the strategy that is quite a bit more complex and really disappointing. Gives you kind of disappointing results. Here's one more example. Made a couple more tweaks and looked at the outcome here. Now we get a $23,000 return on 3 years. So what is that? Maybe that's not even 10% per year, maybe 8% per year, something like that. And this strategy over here did about probably 15%, close to 15% return per year, 47% total, and this was 23% total, so like almost half of that, right? And again, the AI trading agent comes up short compared to the buy and hold strategy. So Just a couple of notes over here. Momentum-based trading basically capitalizes on the continuation of existing market trends, right? People on Wall Street say the trend is your friend. If the stock tends to go up or is trending up, just buy it, right? It's going up and it's making money. Get into that. If it's going down, that is the trend. And again, the trend is your friend. Leave it alone. If it's going up, buy it. If it's going down, stay away from it. That's the only thing that we're looking at here. So market trends. And that's it, guys. So at the end of the day, the buy and hold strategy outperforms the AI reinforcement learning agent-based, more sophisticated, more complicated strategy comes up short. This is the 5th video and the 5th disappointment, but you know what? It is what it is. I can't make this stuff up, guys. Okay. So there you go. I'm going to copy and paste this code. I'll save it right now, and I will see you guys in the next video. Goodbye.